All right. Hello, everyone. Welcome back to another episode of Vacation Rental Blueprint, the podcast where we bring you valuable information and advice and help you succeed in the short-term rental industry. Today's session going to be focused on providing clarity to ensure competence and confidence when you're deciding on the right insurance coverage for your short-term rental. I am your host, Tim, and joining me today, as always, our co-host, TC. TC, hello. How are you?
Hello, hello. Greetings and salutations. Great to be back. And I've been looking forward to this podcast for quite some time.
This is the one that, as we get feedback from all of our episodes, I consistently hear, well, when are you doing it? I have a lot of questions on insurance. I'm thinking about getting into this. You guys are giving me a lot of great information. What's going on with insurance? What's going on with insurance? We're working on it, everyone. And we take your feedback and we get those episodes lined up as we, meet and get to know the experts in those fields. Because I think, as you all should know by now, TC and I are not insurance experts. So we had to go and find an insurance expert to kind of help us through this process and help provide clarity. So, here we are getting into the summer months. We're recording this here in the start of June now. So for many people out there, school is out. Kids are off for the summer. And now as any parents out there know, now is the great battle of what the heck am I going to do this summer? And I think this is our first year in Florida, TC, as you know. So we are now navigating the two kids that think they can just go to Disney 7 days a week, which, that would be awesome. But mom and dad have to work.
Well, you grew up in Florida, so you kind of did the same thing. So payback is hell, huh?
Touche. I think that's a great way to throw it back in my face, and then we can move on. So TC, we got a fantastic episode lined up today, diving into the world of insurance for short-term rentals and getting owners and helping owners understand how it impacts their vacation rental business. In season 2 here, we kicked off with a pro forma episode, really trying to help provide the strategy to build those 3 layers of a pro forma, from building your revenue accurately and not aspirationally, and then modeling out those expenses, and then bringing to a net operating income to kind of forecast out your performance. And as we talked about, in our industry of short-term rentals, a lot of these expenses are not something you want to necessarily discount shop. You want to find the right partners. You want to find the right partners and vendors and pay the right price that fits into your model. But this is also something that you have to remember, that so many lines of that budget or that pro forma, so many lines, you get what you pay for, and you got to find the right solutions. And that's what brings us here today. As I said, we are not insurance experts. And so, our focus here is to continue the partner profile series and find the right partner to guide us through this topic, which is why we have our special guest today. Our guest today, Nick Massey, Director at Proper Insurance. And Nick, hello, welcome to the show. Thanks for joining us.
Thanks, Tim and TC. Thanks for having me on the show. It's a pleasure to be able to talk to your audience about the wonderful world of insurance for short-term rentals and how to manage your risk correctly, so you're not kind of left out in the dust and out of your own pocket.
Yeah. And Nick, I think that's the right spot to start. If you could just tell our listeners a little bit about Proper Insurance and what sets it apart in the insurance industry.
Yeah, absolutely. So Proper Insurance was founded in 2014 to solve the issue of having multiple layers of insurance to correctly protect a short-term rental investment. When you really start learning more about the insurance world and kind of diving deep into foreign languages and stuff like that, right? We all just kind of go, that's why we have agents. They understand it all. But the problem is that you're bound by your contract, and there's 3 different contracts. There's a homeowner's contract, a landlord contract, and a commercial business insurance contract. And short-term vacation rentals really need all 3 of those to be correctly insured in a comprehensive fashion. So Proper Insurance custom penned a policy. It's underwritten by Lloyd's of London and Concert Specialty Insurance that blends the factors of all 3 that are needed for operating this business and having a very broad scope of protection.
Yeah, and I think that's, when I think about, the short-term rental owners that I talk to, they really do say, well, that's why I have an insurance broker, an insurance agent, because, I don't understand any of that. And so they'll just take care of it. Right. And I think that's, where we really want to kind of kind of peel back some layers here to kind of give them that confidence and that clarity to be able to navigate this, because what y'all are doing is very helpful to the short-term rental industry. But I mean, I think so many people out there are familiar with the residential policies, and they think, well, I'll just do a residential policy for my short-term rental because that's what I know. Can you kind of walk us through the differences between commercial policies, a residential policy, and I hear HO3 a lot. If you could just dig into that a little bit, I think our listeners would value it.
Yeah, absolutely. So peeling the onion, the layers of the onion, if you will, in the insurance world, actually isn't that complex. Um, Unfortunately, insurance marketing and what you see on the TV, and your favorite football star swooping down with a cape and protecting your house when it's on fire, like it's great marketing. But homeowners insurance, when you see the term HO3, HO is the policy form for homeowners residential properties, right? And insurance is, to simplify it, can be broken down into rules of three. So you have HO, homeowners, you have DP, landlord, and you have CP, commercial property. And then within those three types of contracts, you have HO1, HO2, HO3, DP1, DP2, DP3, and then CP 1010, 1020, 1030. And those are the three different types of coverage levels within those contracts. So when you see the three, HO3, DP3, or CP 1030, that is a special form all risk policy. That's the best. And that's what you want to have. You do not want to have a one or a two, because those are basic or broad form coverages. And if you're kind of scratching your head and like, wow, my insurance is really inexpensive and I like that. If you have an HO1, HO2, or DP1, DP2, you have very base coverage, and very few things are actually covered on that. They're what's called named peril policies, and you don't want that. You want the three, you want special form all risk. HO3 policies, however, and this is a very important part to this, is that they have a very, very clear exclusion for business activity. And maybe you're listening to this and going, well, I don't really consider my vacation rental to be a business. It's break even, or I don't really make that much money, or it's more of a hobby thing. With the insurance world, that doesn't matter, because in the HO policies, the business activity exclusion defines it as if you're generating in a part time, occasional, or full time basis more than $2,500 a year in gross revenues. And that's the definition of a business in the insurance world. So most of our vacation rentals, if not all of them, fall into that category. And so the insurance world considers it a business. And if you're just running with a regular HO3 policy, they can virtually deny any claim. It does not have to be a claim arising from short term rental activity. It could be a power outage that results in frozen pipes. It could be a windstorm where the tree falls on your house. And they can still come in and deny that claim because you're operating a business by the definition of the contract. Now, to get a little bit deeper, in recent years, the standardization office called ISO has come out with endorsements to homeowners, the HO policy, that redefines the business activity exclusion. And what it's doing is it's saying we're not considering the Airbnb VRBO type model to fall in under the business exclusion. Now, what it doesn't do is it doesn't add or change your coverage. So you're still bound by the policy contract language for what is covered for property damage and what is covered on liability. And if it's excluded, just because you have that endorsement, it doesn't change anything. The other problem with that, if it's not your primary house, you have no coverage, because again, those endorsements and that policy are based on it being your residence premises. So if it's not your residence premises, i.e., primary home, you don't have any coverage. So second homes, we move into, a lot of agents are going to sell the DP or landlord policy, which also come with endorsements. It's definitely a better fit if you have short term, but they do lack in coverages that you can get a lot better coverages through the commercial realm, which doesn't have these occupancy limitations around how it's rented.
Hey, Nick, just to clarify, I wanted to make sure I heard that correctly. So if you have an HO3 policy, the business exclusion is a real issue. And unless it is your primary property, you're not covered. Did I hear that right?
That is 100% correct.
That is gotta be new news to certainly to me and probably to a lot of our listeners. That is great information. So I think as we move forward, it's okay. So most of us probably have an HO3. What do we do? And Tim, you'll guide us through this, but I think this is going to be great information for our listeners.
Right, exactly, because a lot of our listeners are looking at that, that STR strategy, that business strategy, because we champion that as, if you own a short-term rental, you are running a business. And, combined, we bring quite a few decades of business experience to help guide you through that. This is, I think a lot of our listeners have thought of this type of coverage as covering them effectively. And my concern and the reality here, and your expertise, Nick, is saying, you need to kind of understand that you need to assess and get the right coverage if you have a short-term rental that is not your primary residence.
Correct, correct. And if even in just the start of this conversation, and we'll dive a lot deeper, and I promise everybody, like, insurance is a dry topic, but this is super important. And I'll do what I
Not
can to make
today.
it to make it exciting for everybody, and kind of understanding the ins and outs here. But if you're just looking at your contract, right? And most of the time when you buy insurance, you're going to get just like a couple of pages of contract language, and that's called a deck page, and it's just an outline of coverage limits. It doesn't tell you what is not covered. You need to get your full policy. There's going to be anywhere from 50 to 100 pages. And in modern age, you can just ask your agent to send it over to you in a PDF format and look. And it's as you're scrolling through the pages, you look at the bottom of it, right? Now, it gets a little bit more difficult because, like, your State Farms and your All States and some of these what are called captive programs. A State Farm agent can only sell State Farm policies, an All-State agent can only sell All-State policies. But if you have like a Safeco or American Family, American Modern, whatever, you go down and you look at the very bottom of the page, and it's going to have your form numbers. And again, if you see HO3 or DP3, you have that special form all risk. But if you see that HO3 and it's not your primary home, red flags should be going, and it's time to verify your insurance. And that's where Proper is here. Yeah, we would love everybody to buy our insurance policy, but the big thing for us is for the folks who come to us just really looking to get a consultation to verify their insurance. The current policy you might have might be a good fit for your risk management plan, but we're here to do that 15 to 30-minute phone call and look at that with you and kind of show you where these differences are and where you may have coverage gaps. And again, if it's a 30-minute phone call with us. It's free. We're an education company first. We make money selling insurance, yes, but we want to educate you, the consumer, and kind of give you a little bit of an insurance education so that you can make these risk management decisions that are best for your business, right? So, if you're having a hard time kind of figuring out what kind of policy you have after listening to this podcast, just give us a call, and I got 22 agents on the floor. We sell in all 50 states, and we're happy to help walk through those concepts with you to help you better understand what you're working with.
Hey, Nick, we talked to a number of short-term rental owners, and many of them shop lowest price. So, what's the least amount I can pay for insurance? That's one of those things that I have to have. My mortgage company said I had to have it, so I'm going to go with the lowest possible cost. Most of the short-term rental owners we talk to, it is not their primary residence. Is it safe to say, based on your experience, that most short-term rental owners probably do not have the right coverage?
Yeah, absolutely. Um, Most people are operating with that homeowners policy that we see, and it is their second home. It used to be their primary home, and then they were able to use the equity or built up enough cash and bought another home, and now that's a short-term rental, and they've never changed the insurance policy. So homeowners insurance is going to be the cheapest contract in the insurance world because homeowners, where you live there as a primary home, is the least amount of risk for a carrier. And then you move into the landlord realm where you have somebody on an annual lease at your property that's a little bit more risk, right? So you're going to pay a little bit more for that policy. And then in the commercial realm, typically commercial insurance is going to be the most expensive, but it's the most expensive because it's the broadest coverage form. So that's where you're going to get the tiers of pricing. going into this with the mindset of I need the cheapest insurance, on the flip side of that, you need to understand that when something happens, you're taking on more of the risk yourself out of your own pocket. So that's where understanding your risk management, what your policy does cover or does not cover is important. Um, and we can dive more into the coverage differences, but one main example is an exclusion found in all insurance around property entrustment. So everybody has property entrustment in this space. You are entrusting a guest, a stranger, with the keys to your home, and they're staying there for a week or a month or maybe 3 months if you do some midterm rentals with traveling professionals. And every single insurance policy available in the country excludes that or has very low limits of insurance to protect against it. The highest limit I've ever seen is 10,000 on a competitor's policy. So if a short-term renter damages your property in a malicious manner, okay, one thing for everybody to understand, this exclusion is in the basis of malicious damage. Think parties, vandalism, theft, things like that. Nobody covers it. It is not covered on any contract, and it's one thing that Proper really took into consideration in building our product. It's the foremost thing that we're doing in short-term rentals. We're entrusting property, so we actually scratched that exclusion out of our policy and pay those damages to the full limit that you have selected on the contract. So we have stories of, one of my actual personal clients, about $100,000 in damage from a party thrown at his house. He thought 3 people were showing up to his home. Turns out there was 200. And it was a huge claim, a lot of damage, out business income coverage. And we paid that in full, where a competitor's contract would have said, sorry, it's not covered. And you're on the hook for that yourself.
There's some pretty amazing stories on your website. I would encourage the listeners to go to the website, the Proper Insurance website, and read some of these stories because you've got great pictures of what that damage looked like and how Proper came to their aid and covered them. Some great stories, some great photos. I'd encourage everyone to take a look at that.
So I think here, and Nick, you mentioned this. If you think you're saving money on a residential policy, or you think that you're in a good spot, because you've got a residential policy, you're not. You really need to assess the reality that uh, you could be essentially giving away your money. I mean, because if you're paying on an insurance policy that's a residential policy for the protection and the coverage when something unforeseen happens, or something like a party happens, and at no point are you going to be covered for that. That's essentially just wasted expense, because you're not protecting yourself, and you think you're protecting yourself, but in reality there's just nothing there to cover you when the unforeseen happens.
Yeah, it's look, damage caused by a guest in that capacity doesn't happen often. In fact, it's fairly rare in the grand scheme of things. And you can see the blogs on the Facebook groups and all of that, where you have soiled linens, you have broken plates. Oh my gosh, they walked away, they took my coffee maker. Like, that's small stuff. That's all sub deductible items anyways. But these big claims, they don't happen often, but they happen, right? The data behind claims, when you look at the insurance industry as a whole, there's around 190 million residential properties in the United States, and there's between 2 and 2.5 million active vacation rentals in the U.S. So vacation rentals are a very small pool of residential properties. The average homeowner has a claimable event once every 7 years, is the data. Whether it's hail damage, wind damage, trees falling, somebody breaks into your home, broken water pipes, things like that. Now, that's exacerbated a little bit with vacation rental homeowners, and our data, being in this industry for 8 years and managing and handling our own claims, is it actually happens about once every 4 years. So you do have a higher probability of claims happening being a vacation rental homeowner. So that's one thing to take into consideration. You're not just buying an insurance policy now to satisfy a mortgage. You do need to buy and look at insurance as a risk management tool, because once every 4 years, you're going to have some type of claimable event. And that's from our data. Somebody else in this space might have different data, but that's ours, so that's what I can speak to. Um, and that's where it's important to kind of take premium out of the equation in the first investigation of verifying your insurance. You have a policy now; you're paying that price virtually no matter what with whoever you go with. And let's just say that number is $1,500 for a $400,000 residential home, right? And then you're getting a quote. Maybe you do get a quote from Proper, which is a much more broader protection, fewer exclusions with the program that we built. And let's say I'm $3,500. So I'm $3,000 more, and you got to figure that out in your expenses. The thing is you're already paying the 1,500 bucks. That's gone. No
Mhm.
matter who you insure with,
Right.
that's out the door, right? So now we have to figure out in your pro forma and such this extra 3 grand. And one thing I kind of tell everybody, and in a very casual way, is like, look, at the end of the day, if the extra $3,000 to actually have a claim paid, whether it's property damage or liability, is going to put you in the negative on your cash flow, this probably isn't a good property to be doing short-term rentals at,
Right.
right? I mean, we're all going into this, and your listeners, I mean, it's a more professional sense of short-term rental owners in the grand scheme of things. Like, we're treating this as a business, so we need to do that breakdown correctly, move premium off to the side, go particularly to coverage that you need and or desire, and then figure out the costs and everything after the fact and build that into your system.
So Nick, when our owners, maybe we have someone who's interested in getting into short-term rental and they've been following us and they're building the right vendor list and they're putting together their pro forma and they're probably getting pre-approved on a mortgage and starting to put together what their financials look like. Would you advocate for them reaching out to Proper to kind of understand that expense structures they're building the pro forma prior to securing something, but with a general understanding of the price point they're looking at and where they're looking?
Yeah, absolutely. I mean, if you're building out your pro forma, Proper, we're not going to shy away from it. We're probably going to be the most expensive insurance policy that you'll shop, without a doubt. But it's backed up by the coverage that's provided. So it doesn't hurt to run your pro forma with a higher number,
Yeah.
right? And then if that number, you end up going with a different policy, let's say, because that's how you want to manage your risk, then you're just going to make more money at the end of the day, right? Because you're going to save $1,000 or $2,000 a year on your insurance, make a couple extra bucks. But yeah, I think going through, I'm doing it myself on my own vacation rental property that we're waiting for construction to finalize out here in Montana, where I'm at. And yeah, I'm going to use Proper, and my policy is going to be around $3,000 a year. If I went with my regular agent at Allstate, it'd be around $900 a year. But I know it's not the right coverage, right? So, that spread, I'm building out my pro forma based on that higher rate. Now, my management fees might end up being slightly different based on who I decide to use for a professional manager. Maybe I opt to not pay the $15 a month for Netflix or other streaming services and just, buy the TV where they can stream from their iPad or their phone or whatever. Um, because I know for myself, being in this industry, I want the more comprehensive coverage. So I'm willing to spend that little bit extra money to protect my investment and protect my personal and business banking account through an insurance contract that's not going to deny some of these claims that tend to come up.
TC, as we move forward, I think, and we've talked about this with a couple of our partner profiles in the series. We kind of go back and forth because something we hear from short-term rental owners is, oh well, I mean that's covered with Airbnb and VRBO. They have supplemental, they have coverage. They provide coverage in their service. Um, And so, I can scale back my insurance and have a little cost savings here because VRBO and Airbnb's got me. And as we've said before in so many different aspects of, the T's and C's of both of these OTAs, they're in the business of, supporting short-term rental owners in a supplemental way. And I think there's sometimes confusion with individuals entering this business space thinking, oh well, it's all included. That's why I use these OTAs, these travel agents, online travel agencies, because I understand they provide resources and protections. Supplemental coverage. I think Nick, for you, what do short term rental owners need to keep in mind about these supplemental coverages, and really how ineffective or effective they are when paired with a company like Proper.
Yeah, it's a question we get every single day on the phone, and the big thing is, and I'm just going to read straight from a blog post that we actually wrote on our website. If you just search AirCover, we do a real deep dive. But right at the very beginning, and let's look at AirCover particularly. It says, "How does AirCover work with your personal insurance?" This is right from Airbnb's website.
Yeah.
While AirCover protects you while you're hosting an Airbnb stay or experience, it is not a substitute for personal insurance. Since everyone's situation is different, you should talk to your insurer to see how or if your policy overlaps with AirCover. So, why is AirCover recommending that you call your insurance company, right? There's a few things that are very important with this. And the big thing is that if you don't properly disclose to your insurer what you're doing at the property, they can still deny claims, right? So you need to talk with your insurance. You need to make sure they fully understand you're doing um, Airbnb or VRBO, or VRBO. It even goes on to say down further in their definitions of air cover that the host damage protection terms are not intended to constitute an offer to insure, do not constitute insurance or an insurance contract, and do not take place of insurance obtained or obtainable by you. Furthermore, these host damage protection terms are not an insurance service agreement in a standard ISO renters or homeowners insurance policy. It is not insurance. They say that. They disclose
Yeah.
that. You are not a named insured on the air cover policy or the VRBO liability policy that they offer at the time of every time your property is booked. They hold the pen. So to kind of go back earlier in the discussion, I was talking about these little small claims, right? The soiled sheets, the broken lamp, the stolen coffee maker, things like that. That's really what this is meant to be. No different than supplemental insurance that you can go out as a homeowner and buy that's in place at the time of booking, because it is just that, is supplemental to your regular insurance policy. And unfortunately, there is a lot of bad press out there with the OTA platform insurances not paying, not responding to claims. There is plenty of news stories out there that you'll see Airbnb did not comment. Their attorneys are not commenting. There's an NDA with the client, so they can't disclose information on what's going on. It's like super secretive on what they do with this stuff. You should really look at this no different than a marketing play. It's a great
Okay.
marketing play. Use Airbnb. We give you quote unquote free insurance. And yes, there's stories out there of paying. Maybe you as a more experienced owner have had positive feedback with the air cover or the VRBO liability. But again, at the end of the day, they come out and disclose that this is not an insurance contract. It's not. It is a it is a supplemental protection that may or may not pay at the time of a loss. So you really need to have your own insurance that covers you, because if they come in and say no, you want to make sure that you have an insurance provider that's going to respond and take care of you like you should be.
So is it safe to say that a commercial policy works in conjunction with the Airbnb and VRBO supplemental coverage, or is it truly just you need a commercial policy because the commercial policy is what you are going to be relying on, and supplemental coverage through Airbnb and VRBO really shouldn't even come into your thought process on being covered?
Yeah, I mean, ultimately, the best way to look at it is to pretend like it doesn't exist. Um, we have shared in some claims, but not many. To go back to the $100,000 vandalism and party claim I was talking about, I want to say that was a while ago. That was like 2017 when that happened. I want to say Airbnb offered them like $17,000. So I can't say they don't respond, but he had $100,000 in damage, including lost income. So it's not everything it's built up to be and look like. So we have shared in some large liability losses, what are called limit claims with Airbnb. One of them was a carbon monoxide poisoning claim, no deaths, but there was 5 people hospitalized from it. We ended up paying $1 million in settlement. Airbnb paid $1 million in settlement as well, and that's the only time in my 8 years in this part of the industry seeing them join us in a large loss and paying that kind of money.
Yeah, and I think when I think through, owners who have experienced damages, and you had mentioned earlier, what you all have found for a short-term rental owner is, one potential instance every 4 years, generally, right? I mean, that's not a
hmm
guarantee. It's in general, and many of our owners are building out a model to exit in 5 years. So if you're building out a model to exit in 5 years, and you have that information, there's probably a pretty good chance that at some point you're going to experience, some sort of need for claim in your tenure as a short-term rental owner. I mean, I was talking to a woman last month, it was her first, she had just bought her STR, and it was her first guest day, and there was a party, and there were TVs ripped off the wall. It looked like someone had been thrown through or ran through the sliding glass door. It was an instance where the individual who was staying at the property left 2 days before checkout, and then there was a big party, with siblings of some instance, and this was this individual's first rental, and didn't even think about the fact, when she was putting together the model of lost income. And I know you've mentioned it a couple times, but I mean, that's a very real uh, aspect of an insurance claim and damages in your property. Is, if you are booking tight turnovers, or if you've got, a very busy month of guest stays, you're going to potentially have to lose uh, some of that income post event. And just another example of, you may think Airbnb and VRBO are going to cover you for that, but ultimately they won't. And this is where it goes back to that business, that commercial policy, right?
Yeah, and on the landlord contracts that are um, have an occupancy definition of short term rental, like I said, they're not bad policies, right? They do have gaps, and there's certain things like the property entrustment, especially in that example, is not covered on those policies. So even if that particular property owner that you're talking about went and spoke to an agent and got one of these endorsed landlord policies for short term rental, that's not covered, right? They're going to say, no, we don't cover this. Um, so it is one of those things where everybody hates insurance. You don't want to have to deal with insurance, and I just want to get it and buy it and be done with it, and move on to the next thing. But it is something that you need to sit down and spend a little time on, and make sure you're covered for these items. And just like, Tim, you're saying the exit strategy of 5 years. I mean, we see that with so many of our clients. They'll be insured with us for 3, 4, 5, maybe 6 years, and then they sell the asset, right? They've made the revenue, they have the equity, and they're moving on to something different, perhaps, or move into the property because they're at retirement age, and that was the whole purpose of this asset, right? It was to cash flow until we got to retirement time, and then we move in. So we do see a lot of that as well. But the same the the claims, we have the same thing happen too, where a client will buy our insurance because they have a booking. Like, today is Friday, they have a booking coming in tomorrow. They buy insurance and get it today because we can turn around same day binding in some of these situations, and then they have a claim tomorrow, right? And it could be a big liability claim where they're suing you for a few hundred thousand, if not $1 million. We had one example in that where there was, um, I don't know if the listing was kind of rushed to get up, but some of the furniture was a little janky, and a larger, heavyset person sat on a chair and the leg broke, and they ended up suing and winning $60,000 in a settlement. First booking that client had ever had. So these things do happen. I'm not here to scare you out of the industry. I more want to get your mind focused in this forward-facing view of risk management, right? And when we think about risk management and these supplementals, benefits of working with a trusted insurance partner, when you look at any large organization, so let's take a look at the hotel industry, who we directly compete against, right? When you look at the Hilton has an engineer on staff who is their risk manager. And that person's job is to go around and visit X amount of Hiltons on an annual basis to do checks, right? Do they have the slippery when wet sign out and when they had to mop the floor in the lobby? Are they storing the alcohol correctly for the insurance company at the restaurant? Are they doing this? Are they doing that? Um, we don't have that in short term rentals. You, the property owner, are the risk manager. So you need to be forward thinking on this, and working with an insurance provider who actually does vacation rentals is not just putting a little endorsement on a policy. We're here to try and help automate that risk management with you, right? So we might find certain things, like we do a real deep dive on the underwriting side, which some people get frustrated about. I totally understand, but these are safety measures for your property so that you hopefully don't have a claim, or if you do have a claim, that is greatly reduced or easily defendable by the carrier. The biggest thing is handrails on stairs and guardrails around decks. We deal with a lot of clients who have recently bought a house that was built in the 80s or 90s. Building code did not dissertate that that elevated deck with 5 steps going up to it and required a guardrail or a handrail. And we come in and say, look, per current building codes and hospitality law and what every personal injury attorney is going to sue you for, you need to put in a guardrail and a handrail. Now, yes, that's in a little, maybe an unforeseen investment or alteration to your property that you didn't bake in, but this is preventing, limit losses and large settlements from happening because you have that guardrail and handrail in now. That's giving our carrier reasonable means of defense for you, right? So we don't just work as like an insurance company, and this is where I kind of get a bad taste of agents. I mean, no offense to anybody who's also listening to this, investing in real estate and is an insurance agent. I was in the personal lines realm before joining Proper, but we we're selling 25 different policies, 30, 50 different policies. This is not our primary focus when we're in that industry. So what makes it a little bit different here with us, a big thing is we're actually underwriting the property, and we're coming in and saying, look, there's this, there's that, you need a fire extinguisher, you need carbon monoxide. Let's put in that handrail, the $60 handrail from Lowe's on your interior stairs, to prevent these types of claims from happening. We don't want to bubble wrap your property. We obviously can't do that, or you don't want to do that. But providing a safe, fun environment, we're doing our best to help you with that, and not trying to be like the negative Nancy's around, insurance, being the bad guy. We just want to have all the ammo necessary if we need to protect you in a lawsuit. Which, going back to the supplemental conversation, Airbnb is not underwriting your property before you put it online. You can literally just put it online and get going and take bookings. Uh, VRBO doesn't endorse Proper because we're just Proper, right? They could endorse any company. They endorse us because we actually know and understand these properties in and out and what your business operation is, right? So, um, in terms of like some benefits of working with the right insurance provider, you're basically hiring us to be your risk management team, right? And every single year we're gonna review your property, and if there's been changes, you added a hot tub. We're gonna say, look, we see that you added a hot tub. We're going to ask, do you do X, Y, and Z with the hot tub? Do you have a waiver of liability in your rental agreement? And is it cleaned on a regular basis? Because communicable disease from hot tubs is a real thing. And we cover that, like hot tub folliculitis. It's something that we cover that competitors don't. And that's why we're asking you to do this, because it's something that we would respond to, and we need reasonable means of defense for you.
And better yet, if you're a short-term rental owner currently owning a home and you're thinking about putting a hot tub in, I think that's one of the benefits of working with the right partners is you run that by, proper insurance. You understand the impact on your business, not just, oh, our guests are going to love it. Just like any business, you're gonna connect with your risk management team, and you're gonna review all aspects of an addition like that. You're gonna understand the risk associated, and then you can make an informed decision if it is truly, the pluses outweigh the minuses, and I'm going to go ahead and add that hot tub, right? I think that's such an important piece of having the right partner to do business with.
Yeah, and if you keep your eyes on the blogs and the Facebook groups, you probably saw over at the beginning of this week, there was 2 deck collapses from hot tubs sitting on decks over the weekend at short-term rentals, Memorial Day weekend, where they put a hot tub on the deck, and the deck wasn't structurally engineered to carry that weight. And so the deck collapsed, resulting in numerous injuries and hospitalizations. So there's only so much we can ask and tell you to do. The other thing for everybody to look at that's not necessary, it is insurance related, but it's more just for you to get an education on safety, is doing a certified safety type program. If you're involved in those Facebook groups, you're probably familiar with Justin Ford from Breezeway and the Breezeway Safety Program. That is an amazing, amazing program to help educate yourself around these nuances that you may not have thought about. Right, like my elevated deck that was built in the '80s. If I'm going to put a hot tub on there, I need to have it structurally engineered correctly to carry that type of weight to avoid these types of injuries. Like with Proper, I'm not coming out to your property and looking at your deck and saying it's not fastened correctly or doesn't have the correct load limits, right? So there's only so much we can do. Now, if those deck properties were insured with proper and there's a liability lawsuit that goes against the homeowner, we are going to respond to that. Just because the deck wasn't engineered to carry the weight doesn't mean we deny the claim, right? But in the grand scheme of this whole conversation, learning about insurance, part of that, like I said, is being your own risk manager. And the best way to be your own risk manager is also to look at and do the safety programs where you go through a checklist, a 25 to 50 point checklist of your property and check everything off and get a fundamental understanding of how to create safer environments for our guests. So we're not reading the stories of these debt collapses over a holiday weekend anymore.
And I think, there's so many features and benefits that I know, proper insurances cover. TC and I, I think we're going to do a whole episode on bed bugs just because they freak us out. But I think when, with your policies, covering, I think two things, and they're two separate things, and I'm not trying to say they're similar, but they're both kind of like pests. And maybe that was the wrong thing to say, but bed bugs and squatters. I'd love to kind of just understand those features of coverage that many, 95% of the short-term rental owners getting into this that I talk to, it's not even in their sphere of awareness. So past bed bugs, and then just generally, how to think about squatters and how those coverages are there from proper.
Yeah, so with proper specifically, we were first to market with bedbug coverage, and that originated from a story in Oregon. We partner with the Host to Host group out of Oregon, and they had a homeowner who her only means of income was the detached ADU in the backyard. Her son had medical problems, and that's how she was able to make the money. When her son went off to college, she started doing Airbnb and had a bed bug issue, and it cost her a lot of money she didn't have. I want to say it was around $6,000 to $7,000. And so based on that, we came out first to market with the bed bug protection. Now there's other companies that are doing it now. I'm not going to say they kind of ripped us off, but they saw that the forefront company in the space was adding these types of coverages, and they've come out with their iterations of bed bug coverage, but they're all very similar. And what the bed bug coverage does is it covers the remediation of the bed bugs, so the fumigations or heat treatments of the property, and it also covers your lost business income for 7 days. And specific to proper, we give you a $15,000 limit. So you're depending on the size of the property, your bed bug remediation could be 3,000 to 10,000, and then 7 days of lost business income. Now we can't cover everything and we can't do everything fully. So we were able to get approval on that with a $0 deductible with our program, but only 1 week of business income. Bed bug remediation takes 3 weeks. Okay, so it's better than a kick in the shin, right? You're going to get the expense covered for the exterminator plus some business income back in your pocket. And then on squatters coverage, we again first to market on that, and that came to fruition through COVID when we started seeing a lot of these properties being booked more on a midterm basis for people who are able to work remotely, and they end up staying at a property for 1, 2, 3, 4 months in some cases. So we brought squatters coverage to market. It's also a $15,000 limit with a $0 deductible, and it covers $5,000 in the legal expense for evicting somebody from your property, as well as $10,000 in lost business income. Now, every state has different squatters type definitions, but most states are going to cap it, are going to do it at 28 days. So if you have somebody who's only staying for 10 days and they don't leave, at that point it's a trespass and you call the sheriff and get them removed. After they're able to claim tenants' rights is when you have to go through the protocol of evicting squatters, which can take up to 30 days. And it costs money to file everything with the courts. They get they get sent documents. The sheriff drops stuff off to kick them out. Um, so we're going to pay for those expenses. And then on top of that, if they damage your property, again, we don't have the property entrustment exclusion. So we're going to pay for the damages caused by the squatter at your home. And another one that we recently brought on about 2 months ago is equipment breakdown coverage, which we've seen throughout the years. AC units, the bearings or the compressors seize. You have problems with the stoves and other appliances. Maybe your electrical panel your HVAC system, the water heater, stuff like that. So we also brought in equipment breakdown coverage recently to our policy, which allows you to not only get lost business income, but also the cost of repairs and or replacement subject to your deductible for fixing or replacing that broken down equipment.
And you mentioned loss of revenue coverage a couple times, and just for our listeners, could you just give just a general overview of loss of revenue? I mean, obviously it's not endless loss of revenue, so how
Yeah.
how do they think about that coverage as they're planning their property?
So to go back to kind of the rule of three in insurance, there's technically two types of coverage, but there's a third one that you need to be aware of because it's not loss of income, it's not loss of rents, but some people think it is. So on your HO3 policies, you have what's called loss of use, and there's a limit of insurance. And a lot of folks think that means if their rental goes down for some type of loss, that they're going to be paid out of that. And that's not correct. Loss of use is meant to rehome you, the property owner, in the event that you can't live in your property, right? So, Tim, your house catches on fire, you're going to file an insurance claim. You have loss of use coverage on your primary home. That's used to go rent out other accommodations for you to stay in while your property is under repair. Then, when you on the landlord policies, you have what's called loss of rents. Now, loss of rents is okay coverage, but it pays a fair market value, which includes long-term rentals in your area.
Hmm.
And short-term rentals make more money than long-term rentals, so you're not going to get paid out fully. It's not a guaranteed, total replacement of your revenues. Well, then you have lost business revenue or lost business income, as it sometimes is called on the commercial side. And that's what Proper offers. But we went a step beyond that and changed up the language a little bit to be a bit more comprehensive. So every insurance policy is going to cap any type of loss of rent or loss of income coverage at 12 months. Proper does not. We have no time limit on our income protection, and we also pay true gross revenue. We do not pay net revenue, we pay gross because you still have expenses.
Right.
So you got property taxes, you have insurance to pay for, you have a mortgage to pay for, you have utilities, et cetera, et cetera. So we pay true lost business in revenue, gross revenue on our policy. Because we don't have a time limit, we tell you, you tell us how much coverage that you want, right? So the rule of thumb, if you want to be quote unquote fully covered, you should insure your income for 18 to 24 months, because that in a total loss situation is what you very well could be looking at um, in terms of getting a home built, because you have to get the permits, you have to do the cleanup. You could be 6-7 months before you get contractors out there to start building. But we have a lot of clients who, they just want to cover their expenses for 12 months. That's perfectly fine. You insure for a slightly lower amount of income and you save a few dollars on your premium. But if you're heavily reliant on the income that's coming in, and this is how you're paying for your kids' college tuition or funding your retirement account and other investments, and you need to have this income, with Proper, you really should look at 18 to 24 months because we don't have a time limit. Pay a little bit extra in premium to be protected on that. Um, so that you're not out, extra dollars at the end of the day because you underinsured your income. But you know, again, some people come to us and they've got deep pockets and they don't really care about the income, and so we put a minimum limit of 10,000 on there, and we move on, right?
Yeah.
So it's with us, it's really up to you how much you want to insure, but it is vastly different than the other commercial policies out there because they are going to cap revenue at 12 months.
That's great. And, I'm here in Florida, and this isn't an issue just beholden to the state of Florida. But I mean, obviously, we have some big storms that like to roll through occasionally, especially starting this time of year and running through October. But the threat and risk of flood top of mind for a lot of owners I know here and across the country for that matter. I mean, what does an owner need to keep in mind when they think of flood insurance, and what do you recommend the best resource is for that type of coverage?
Yeah, great question. So back to the rule of three, there's three other types of insurance that you can get on your home.
Okay.
You have fire and liability insurance, which is the property and liability policy, whether it's a homeowner, landlord, commercial, or whatever. Then you have flood insurance, and then you have earthquake insurance. So we always hear the term bundling, right?
Yep.
Bundle your insurance and save premium, whatever. It's still three insurance policies that you're buying, right? You're
Hmm.
buying a home policy, you're buying a flood policy, and an earthquake policy. When it comes to flood specifically, One, you only need flood insurance if you're in a designated floodplain, and generally your lender is going to tell you if you need it.
Hmm.
Flood is available in kind of limited capacity. A lot of folks will go with the FEMA program, which I believe has a cap limit of 250,000. They may have upped that in recent years, but it's pennies on the dollar for larger homes. And then there's two other flood companies out there that are rather reputable to look at: Neptune Flood and Flood Simple. And those are independent companies that sell flood insurance. You may pay a little bit more for those, but you're going to get a better limit of insurance for your property. And so for like in Florida, anything coastal, you're definitely probably going to need to have flood insurance. And I would look at Neptune or Flood Simple
Okay.
because you can generally get better coverage than the FEMA program. There's tons of companies out there that do them, but those are the two most reputable independent that only do flood insurance.
Got it. So it was Neptune and who else?
Flood Simple.
Flood Simple. Okay. So yeah, I think this is all great for our listeners to kind of plan and understand the different types of coverages and for example how Proper really specializes in STR and keeps this type of owner in mind when the unfortunate happens, right? When it actually does occur and you're filing a claim. Just kind of walk us through how proper insurance runs the claims process and how it benefits the short-term rental owner because that's of course no one wants to ever have to file a claim, but if based on how we're talking today, if you have an exit strategy and the law of averages, there's a better than average chance you may file a claim over the course of 5 to 7 years. Walk us through that process.
Yeah, so looking at the retail market space, when you file a claim with your local Main Street agent, your agent is not handling anything with the claim.
Hmm.
That claim goes to the underwriter, and let's just, say it's Safeco, right? They're a very reputable top 7 home insurance company. Safeco's going to they either have their own adjusters or they're going to use what's called a TPA, a third party adjuster. And those third party adjusters get paid whether the claim's covered or not. And they're looking at policy language in a very, very black and white fashion. And that's where these claim denial happens. And we get these phone calls like, I need to change my insurance. I just had a claim. It wasn't covered. Now I want to make sure I have the right policy.
Hmm.
Now, we used to use a third party claims adjuster. We were required to with our carriers. And how we made it that many years using that TPA with very little negative review is beyond me because I'll be honest, third party adjusters are very difficult to work with. Um, and because they're not specific to one policy contract, they they kind of just go based on what they know, right? Not necessarily reading like our policy line by line and covering the risk based on the uniqueness of our contract. So in March of 21, I believe it was, or maybe it was 22. Either way, we have in-house claims authority now, which is very unique for a program style business like us. So we have our own in-house adjusters. So you're going to call and work with one of my agents, if not me, depending on where your property is located. We know our policy in and out. You're going to get top level insurance education, and you decide to buy the proper insurance policy. Well, 2 years down the road, you now have to file an insurance claim. You're calling the same phone number, you're getting routed to the same office, and you're talking with our in house claims team, and they know our policy in and out. This also allows us to be a little bit more liberal in certain areas and kind of stretch the boundaries because it comes down to the intent of our coverage. Now, yes, there's certain things that just aren't covered and they're not going to be covered and you may get a claim denial.
Yeah.
But there's certain things that kind of float and flirt with the edge of it where we're able to, not just flat out come out and decline the claim, but go, okay, this part we can cover and maybe in this part we actually can't. So instead of just flat denying everything, maybe you do get a little bit. And then there's plenty of cut and dry situations that are just they're covered, just covered, and you'll start getting payments. The biggest advantage outside of the customer service side of having in-house claims authority is expedited payment to our insureds. So our claims reviews, I feel, speak for themselves. If you go and look at our reviews after listening to this podcast, there is a new one on there that is very lengthy, but well worth the read. And that is the white glove service that we present to our clients. You are buying insurance not to have insurance. You are actually buying insurance for a future claims experience. Okay. And we want that future claims experience for you to take a very stressful situation and walk you through it and make it as less stressful as humanly possible. That particular claim, once we had all the information, which took about a week to get from the initial claims filing, we literally turned around and sent payment within 24 hours to cover the loss. So we do our best to work as quickly as possible to get you back up and running and back into this marketplace and not drag it out for 6 months.
That's great. And all right, Nick. So all of our listeners right now are thinking, man, I work with Proper and I made the right choice. Or B, oh shit, I have a residential policy. What do I need to do next? Okay, well, we know what you need to do next. You need to switch over to the right commercial policy and align yourself with the right partner to guide you there. But I think they're also thinking that sounds expensive. It sounds expensive, and I know you've hit on the model of you have to, just like anything in insurance, especially commercial insurance, this is you're accounting for future issues arising, and you're really more forward thinking. You're being a more forward thinking business owner with selecting the right policy. So, I think the higher cost is easily justified, especially when you factor in if you have a residential policy that you're paying on. You're basically paying for zero coverage for lack, for in very simplistic terms, right? But with our listeners, fresh off the heels of our pro forma episode, those individuals working through their pro forma call Proper Insurance and have that consultation. But is there any general kind of calculation or any general format for an expense line on their budget that they can put into their pro forma as they work through the model and then eventually get to that point of a call? Is there any guidance you have there on how they can best model it? Maybe at the initial stages of planning out their business?
It's really tough because
Right.
because we're in all 50 states, every market is different.
Yep.
So, excluding Florida from this, and coastal properties and, pretty much anything that touches the Gulf Coast,
Yeah.
and Atlantic coast. But, I would say our average premium is around $3,600 a year for the average single family home. So that's a good starting point. But if you have a larger home or an older home, or you're in, Tornado Alley and this stuff, it's going to be a little bit more expensive. You could easily be looking at $5,000. Now, I don't want to scare folks away from, reaching out to us and getting a quote and a consultation, but that's the reality of it. Like, one thing we didn't really touch on much yet is the liability component. When you own a vacation rental, your two biggest liability exposures is first your car that you drive every day, and then second to that is going to be your vacation rental. And you have a target on your back because you own a second home, and that must mean you have money. And I got hurt, I'm going to sue you. And so, one way to look at these premiums is to think about it not so much as protecting the asset or covering these small damages. Think of it as you are putting world class attorneys on retainer for your business at that premium in the event that you're sued. Now, most lawsuits that get filed for personal injury, they tend to happen 1 to 1.5 years after the accident happened. Okay. So somebody slips and falls at your property. They text you and say, my stay was great, but my aunt slipped and fell and we had to take her to the hospital. But other than that, it was a great stay. Like, oh my gosh, I'm sorry for that, but I'm glad you had a good stay. Consider us in the future for your next vacation. Well, a year later, that aunt continues to have ankle problems. They're going to sue. They're gonna sue. And so having the right type of liability coverage, especially very broad coverage and those higher limits, I mean, hands down, if your limit of insurance before any umbrella is less than $1 million, you need to change it. You need to have $1 million on your base insurance policy, no matter what. And what that also does for you too is it puts you in front of the line when your local ordinance comes out for short-term rental permitting and they require a million in liability. Now you already have it done and it streamlines your permitting process. But it's real important to understand with liability, you can also be held liable for claims that happen off your property line as well. So, 1 out of 5 liability claims that are filed in the US, grossing about almost $1 billion in payout annually, is dog bites. So, if whether you're dog pet friendly or not, a guest can either sneak in a dog or bring their dog. They take that dog for a walk and it bites somebody down the street. If you don't have a commercial policy, you don't have coverage. And the reason for that is these landlord contracts, the DP contracts that we talked about, your liability coverage is limited to premises only. So anything that happens off the property line that you're named in a lawsuit for, you have no coverage. You're paying for your own attorney, $200, $300, $500 an hour to defend you or pull you out of that lawsuit. It could be your neighbor's dog bites a guest when they go out for a walk. And now they're suing everybody. They're suing the neighbor, they're suing you, whoever they can get their hands on. And you might be thinking as you're listening is, how am I liable if my neighbor's dog bites my guest? Well, you're right. You shouldn't be held liable, but you're still named in a lawsuit. And to defend you, that costs money. And so is it your money out of your own pocket? Or is it this more robust insurance contract that you bought that is going to come to your defense because it's not an excluded claim or not limited to premises only and take care of it for you? So these are things to take into considerations and in areas of insurance concept that when you reach out to our office, my agents are going to talk to you about, um, and where you as a consumer need to be thinking about, what kind of coverages do I need, or what type of instances am I worried about, and bring those questions to the table when you chat with us, so we can go through the details and how our contract is going to protect you against those particular instances.
Yeah, and I'm glad you brought up personal injury because that's really where, before TC summarizes for us, this is really where I wanted to end it because I've experienced this over my years running service and hospitality companies across the country. You don't necessarily naturally think about it until you have experience in the space, but when someone slips and falls in your space, you're liable. And it's not just slips and falls because as soon as you slip and fall, you're open to a world of possibility. Does that individual break their wrist trying to catch themselves on a fall? Is that person traveling from out of state? So now they've got to go to a out of state hospital. How do they travel back? Do they need to change their flight? Do they need to miss work? Do they need to have surgery? And it's tough to have insurance conversations, and this is my opinion, but it's tough to have insurance conversations without going down this rabbit hole of, the what ifs. But personal injury for me is always essentially what keeps me up at night because as STR owners, we're providing a roof for people to live in. It's not just like a hotel or a coffee shop where they're not necessarily there as much. We're bringing families together and trying to create an environment for them to make memories, but that is usually a larger number of individuals in a space for a longer amount of time because they're enjoying, a family togetherness or celebrations. But that factor of time plays into a potential for the risk of personal injury under the space. And it's something that when I talk about this with short-term rental owners, unless you have business or business experience specifically in sort of a brick and mortar environment where customers are coming to you, it's not really top of mind for them, right? And that's where, the right kind of policy, you can take all the precautions in the world, but personal injury is something that is always sort of an overarching risk in the STR space.
Yeah, yeah, it's we've seen some crazy stuff,
Right.
and I could go on for
We could
another
just do a
hour
story,
talking
a
about.
whole show on the stories of.
Yeah, and if anybody listening ever comes to any conferences or has been to any conferences, you've heard me talking about them, in breakout sessions and such. But it could be, I'll give everybody one example that I always thought was interesting, and maybe it was just the way I was brought up, in Montana, kind of rough and tough environment,
Right.
Rocky Mountains, like, you know, um, but there was a young boy, and their family, and they were staying at a property, and I won't get too ingrained in the details, but the property had a pool. The young boy decided he was going to show off to his parents and run through the house, through the sliding glass door, and jump into the pool. It was a cool trick. Well, the cleaners did a great job at cleaning the sliding glass door,
Ah,
and the sliding glass door was shut. And this kid ran right through the sliding glass door. Now, initially, you'd be thinking, how are we responsible as a property owner for this kid getting some lacerations on his leg and on his cheek? And I think it was like 27 stitches between his leg and his cheek. Now, me, like I said, growing up, love having scars, show them off, right? There's stories about what happened. Oh, I did this and I ended up, yeah, whatever. But the reason the homeowner got pulled into this lawsuit was this was a 1980s built house and they recently renovated the home. But current building codes require that your sliding glass doors are tempered glass. And it was not tempered glass. And that's why they're getting sued over this injury that's now the parents want to get plastic surgery on his face and his leg to try and remove the scar. They're demanding like $375,000 for this. And you know what? I think they might win because the property owner, when they remodeled the property, did not take necessary measures to make sure that their sliding glass door and everything that they're doing is up to current code. So it's things like that we don't really think of. We live in a very litigious environment, unfortunately, and people can literally sue anybody over anything. And it goes back to that: are you covered or not? And if you're not covered correctly, you're dealing with that $375,000 demand out of your own pocket. One of the biggest things to think about when you're trying to decipher or choose coverage, and these are for specific properties to kind of keep the conversation in a non-biased way. If you're a waterfront property, if you're on a canal, if you're on a river, if you're on a lake, and even if you have docks or not, you need commercial liability. You cannot operate your vacation rental with a landlord or homeowner's policy because your coverage does not extend off the property line. You have an exposure directly at your property where if somebody is in that water and is injured and you get sued, those policies will not respond. You have to have a commercial policy. If you're offering amenities like bicycles, or maybe you're 2 blocks away from the property or from an ocean or a lake or something, and you have a kayak or a paddleboard or beach toys for people to use, you cannot operate with a premises or personal liability type policy. You have to have commercial coverage because that is the only coverage that extends off the property line. You are offering these amenities to the guest that lures them, as an attorney may put, off the property, and because of that amenity that you provided led to the injury of the injured party here. So if you're thinking about your property and you're in Minnesota and you're on a lake and you open up your policy and you see it says premises liability, it's time to change your contract. It's time to look into commercial insurance. It's time to understand I need to pay a little bit more in coverage so that I know I'm protected because I'm offering these types of amenities, or I have this amenity nearby that I'm advertising to bring people to my home.
that's so helpful. And you know, TC, I think we've done it again. I think we've had another amazing guest on where you and I wrap up and we think, okay, well, not only did we teach our listeners something, but you and I gained valuable insights from this as well. And one of the pieces that TC's so great at is he likes to summarize our episodes for us at the end and really have those key takeaways. And TC, I think you're up because there's a lot here to summarize.
There really is. And first and foremost, I would say to our listeners, take advantage of the experience and expertise that Proper has. Give them a call. I will tell you that from my personal experience, I reached out. I got a call from Jacob Dolan in about 30 minutes. And not only did I have a proposal, but I had someone on the other end willing to spend 45 minutes with me, walking me through the proposal, what the ins and outs were. Just great service and great information for me. So I would encourage all listeners, very least, place the call and get the education. So trying to recap this, Nick, I'm going to recap and then you're going to tell me what I got wrong. And then we're going to give you the opportunity to make any closing comments that you think our listeners would benefit from. So I'll start with this. If you own a short-term rental property, you own a business. So let's start there. it is a business. And as a short term rental business, you don't need just a residential coverage. You need all three types of coverage: residential, commercial, and landlord. Proper offers that to short term rental owners. And as an owner of a short term rental business, you are likely to have a claimable event within 4 years of ownership. For traditional residential, that's about 7 years. But because the nature of the business we are in, you can look to have a claimable event within 4 years. That's a key headline that I think we all need to take away. Next, if you're like me, you're going to find out that you have a standard HO3 policy and it is not your primary residence. So, what did I learn? I don't have any coverage. I am a bit panicked now. And as soon as I get off this call, I'm going to call Jacob back and finalize the policy. But again, all joking aside, if it's not your primary residence and you have an HO3 policy, you don't have coverage. In addition to that, we can't rely on VRBO and Airbnb for our insurance coverage. What they offer is good marketing and in some cases, a small amount of coverage, but they are not your insurance provider. And you shouldn't be looking to them to be your insurance provider. Next key headline: liability exposure in this business is significant, and you've got to make sure you have good liability coverage. This is one of the differences with Proper. Not only do you have good liability coverage, but you have world-class attorneys that you are having access to when you need them. And then finally, what are some of the key differences that we learned about today? And I will tell you, there are many more, but here are some key differences when you go with a proper insurance. One, you are really gaining a risk management team. Nick shared with us a great example. If you stay at a Hilton hotel, Hilton has an engineer, and that engineer is their risk manager, and they go from property to property to property, making sure that all risk or much risk is mitigated. Well, as a short term rental property owner, you are the risk manager. If you go with someone like Proper, they are going to be your risk management team. Huge benefit, huge asset. In addition to that, you're going to have coverage like bed bug coverage and squatters coverage and equipment breakdown coverage. And these are the kind of things that you wouldn't necessarily or likely have with any type of standard HO3 policy. And finally, one of the big advantages that I learned about when I started talking to Jacob over at Proper is that they do have their own in-house claims adjusters, which is a huge benefit. What does it mean to you, the owner? It's mean that you're going to have expedited payment if indeed there is a claim and you need to make that claim and you need your money sooner versus later. So, Nick, those are the headlines that I think our listeners really benefited from today. But let me pause there and please correct what I got wrong and add any headlines that you think our listeners would benefit from.
Yeah, glad you've been speaking with Jacob TC. Like I said, he's one of our 22 agents. He's one of our long-term agents here, one of the OGs, if you will, on the team. Super knowledgeable guy, and just a great agent to have on your side. A couple of things. Just a quick ad. When you quote with us, you have a dedicated agent. This is not a buy the policy and never hear from my agent again. They're heavily involved, not just through providing you the education on making your risk management choice and what policy to go with, but they also work side by side with underwriting. Some areas of requirements from underwriting, you the agent can help get creative on ways that are a little bit outside of the ordinary or traditional to meet that requirement, that still are hopefully inexpensive, because like I said, sometimes we have to do some structural alterations with underwriting that meet the requirement, but in a creative way that helps you save money, and you're not putting up 100 feet of wrought iron fence that's going to cost $30,000. Maybe you do like nautical ropes or something like that to meet the requirement, but that just comes with our experience and ability to in-house underwrite this risk. In terms of whether you're shopping proper or shopping anything else, one thing that I'll leave everybody with here is you need to be focused on the financial stability of the carrier. Okay. We use Lloyd's of London, and we are the only specialty short term rental contract in the entire Lloyd's of London market. Okay. So if you have a Lloyd's of London policy and the agent is not proper, it is not our product. It is not the same. It is different. Lloyd's of London sells hundreds of thousands of different programs. We are the only one in the world for short term rentals. But you need to look at financial stability. So Lloyd's of London, they've virtually invented a commercialization of insurance in 1688. So they've been around a long time. They have a lot of experience, and they're rated A through AM Best, which is an excellent financial rating. And then we use Concert Specialty, which is also an A-rated company with an excellent financial record. Tim had mentioned insurance troubles in Florida. If you're in Florida, you've seen the news. There has been, I think, 20 or even more carriers that have gone insolvent in the state of Florida because they didn't have enough money to pay claims. So when you are looking at a carrier, do some quick research from the quote. Again, the carrier here isn't proper. It's Lloyd's of London or Concert Specialty, and make sure you have a financially stable insurance provider behind you. In terms of reaching out to us and finding us the same way that TC did, you can very easily just go to our website. It's www.proper.insure, or you can just Google Proper Insurance, pop right up. You can also call us on our number, our 800 number being 888-631-6680. And then depending on the county and geographical location of your property, you'll be connected to the appropriate agent in my office for that area. And they'll be able to go through all the details with you and start talking about, kind of how to reshape your risk management plan.
And for our listeners, just my personal experience. Again, Jacob has been great, continues to be great. I think I've talked to him 2 or 3 times just because, insurance is not something that I deal with every day. And I had a lot of questions, and Jacob was more than willing to take the time to go through those questions and provide very thoughtful comments. The other thing I would add, though, again for our listeners, the premium is about, for me, about twice what I was paying. So I thought about that for a moment, but it's really not that large dollar amount. What I had to think about is it's only the additional premium that I have to think about. I'm already paying a premium. Now I'm paying more. What am I getting for that additional premium? And that's ultimately what I thought about in making my decision to move over to Proper. What am I getting? Well, first of all, I'm actually getting coverage because for what I call layer one of my premium, I was paying a lot of money for no coverage or very limited coverage, if any. So now I'm paying a higher premium, but I'm actually getting the coverage that I need, and Proper is going to provide coverage on areas of my business, short-term rental ownership, that others won't. So for me, it was an easy decision to make. I simply built this additional premium into the performer that we talked about on the last episode. And yep, it's more expense, but this is one of those areas that I have learned my lesson the hard way. You really don't want to shop the low-cost provider. You want to shop for that group, that company, that service entity that's going to provide you with what you need in time of really trauma to a large degree. So, Nick, great episode, man. I've learned a ton. I've probably taken 5 pages of notes just for me personally. And I feel like at some point in the future, we've got to have you back on because, man, I'd just like to hear some of the stories.
I'm happy to share them. Yeah. There's a lot of there's a lot of crazy ones out there that are head scratchers. Like how does that happen at a property? Like it's insane. So again, like, don't want to scare anybody out of this business. Again, damage doesn't really happen that often. It's just that we're so ingrained in what we do, so we see it firsthand. But yeah, I would love to come back, guys. This has been great. I've enjoyed talking to you guys. It's been amazing questions around insurance, and I really hope everybody listening here is kind of thinking about insurance differently, that it's not a necessary evil, that you need to build insurance into your business of short-term rentals as a risk management protocol. Like, the first thing, if you're buying a new house or if you're listening to this and you're getting into vacation rentals, the first thing you need to do is have the money, whether that's through the bank or if you got the money to buy it cash. The second thing you need to do before you close is buy insurance. So start off right off the bat with getting the insurance information up front, knowing who you want to go with as an insurance provider as you're finalizing loans to buy a property, and take the time and fully immerse yourself into an education phone call with us. We would love nothing more. We love hour-long conversations here. So if you got an hour, if you only got 10 minutes, we can squeeze it in 10. But like TC said, just make the phone call or go to the website and put in very basic building information. It shouldn't take you more than 3 to 5 minutes to fill out a quote. And then within hopefully about an hour or so, you'll get a phone call and an email from one of my team to go through with you and kind of break everything down, and prepare yourself by having your current policy out in front of you. Collect that information as well, and share it with my team, and they'll go through that thing line by line with you and show you where these coverage gaps exist.
Well, there's no better way to end it than that. So we're going to do just that. Nick, TC, thanks for the time. Thanks for the insights. And all of our listeners, consider these insights. Take the steps to protect your business. Share this episode with individuals you know in the short-term rental space. Like, subscribe to the episode, and we look forward to the next episode. Take care.